Good afternoon, traders. It is the chart review for the S&P 500 futures, the ES, the MES. It is 6/7/2019, Friday. What an incredible week. I think it was one of the best weeks in history for the market. 149 point run there up to the top there. So, hey, cheap money can get the market excited, I guess. I'm going to show you the calls from this morning and then kind of go over them a little bit, and we'll cover it in the full video. Some of the other volume that's behind it. You can definitely see here that, 65, here's 60, 65, 75, it's probably like, right, 60. I want to go across the top of this candle right there. So 64.75, 65. And then your next you got a little shallow volume here at 72. Then 78, 80, 78 to 80 right in there. But you can see it's, it was able to chop this up pretty good right here. And this is even probably a little bit less. You got big bars in here, so I think you could have a pretty fast run up here to the. Okay, so the level 60, 64, 75, 72, 70, to 80. Let's see what I got right. Was the big extended run. Some of the levels kind of worked out, but let's go over the reason why they didn't work as well as they should have. So see you in a second. If you like the analysis, please subscribe. If you have any questions, please comment in the comment section and I'll get back to you. So let's do it. Okay, traders, so the blue line right here is 7:30. This is the open of the market right here. So we actually tested this 60 level before the market and got a nice sell off. If you would have wrote it all the way back down to 51, that was like 9 points. But I think what happened is you could kind of look at this as either a spike in channel. I don't usually draw trend lines, but it's good to be able to realize what's happening on your chart. So what you get is everybody right here buying into the market, and I think we can kind of see that they were all buying in right here, and everybody that got short, right, was offsides. It didn't really decrease or anything. And when you beat the 60 level at the open right here, based and on the news and everything, everybody that was short had to reverse, and that's why you got sideways movement. Everybody was basically selling and buying, selling and buying. This is a spiking channel, and what happens is the people that are short have to continue to sell, and then as soon as it moves down a little bit, they bring their cost basis up by selling more, and then as soon as it goes down, they buy to get out of the market. They sell, 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 sell. As soon as it comes down enough that they can get out, they buy. And then you basically see this kind of like in this candle right over here with this big pop. Basically when it breaks out and the big pop over here, you can see all the buy orders that are hitting every time that it breaks out right down here. Breakout, 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 breakout. You can see all these big delta bars. And what's happening is all the short people are exiting the market, driving this thing like crazy. And so there's just never enough sellers to force it the other direction. The people that originally sold are basically selling more, trying to get out. And they're fueling the market when they purchase back their shares, and it's gone. And so it was thin up here. Um, I showed that in the morning prep video, and so you never really got any pullbacks because the positions weren't great enough, and you had the news and everything else on top of it. So the levels did work, right? You can see that the market tried to pull back. People tried to sell those levels, but it just didn't happen. Um, so that's what's wrong with the levels today. You still could have made money selling the levels. There were pullbacks off of it, but scalping levels were kind of okay. That one not so good. Blew through that one. You'd had that test right there before it. Pulled back, found support. On these strong days, the scalping levels work better as support rather than as shorting levels, which you can kind of see right here. But there was a level right here. You got a little bit of pullback. Again, a little bit of pullback, a little bit of pullback, and then finally the top up here. I got two arrows. And then finally at the top, right at my level right here, and then it finally sold, and there was a level right here. You can't see behind the yellow line, and then it bounced. It was trading through, down to the line again, through it. So scalpel levels were okay. You just had to realize that on this up move or whatever, you had to use them on the reverse. They were better on the reverse, and that price was going through them because of the way that the market was trading. You can see that they were still in play. So this is what they call a P distribution, and what happens is when you get this spike up here, and then you get all the volume up here, right? And so you have what you can do is draw a P. I don't know if I'm doing that real well, but so this is like a P distribution, and then on a down day you could have it the reverse, right? It would go down, and you would have a B distribution day. When you have these spikes that are these strong, the market doesn't usually come back. It stays in the top third up here and trades. They finally hit their spot. Usually they're up over 20,000 on the delta. Usually right around 20,000 on the delta is where things are too lopsided. I've seen it go all the way to 29,000 though, but 20,000 is usually a pretty good indicator. And then they start to take some of the inventory off, and they don't sell it hard, but they do sell it fast, right? They sell into the excitement because people are still buying to try and get on this thing. They don't realize that it's gone as far as it's going, and then they basically give it all back, but it stays up there at the top, and it's called a P distribution in kind of volume profile world, and that's what you get. You get this shape. So just thought I'd add that in there. Let's head back out to the weekly. So I don't think there's another weekly bar. Maybe, I don't know. Maybe this one over here. But I don't see another weekly bar quite like that one. That was an incredible week. We're up into the top of this. There's only really one level left, and it's right up here at 2910 in 2900. That if it doesn't sell there, we probably got new highs in store. And with them talking about rate cuts all over the place, I don't see it stopping. Daily, again, we reached the max extreme here, just a couple points shy of it, and we're into the final volume node up here. There'll be a lot of volume up here to kind of take out, but take a look from here, right? So from here through here, there's nothing, right? Come Monday, if they pop it over this, you're gonna have probably like a 16-point move, maybe even more up into this node right here. The excitement is tangible today, so just be aware. Incredible 240 minute. Look at these candles non-stop. But what we do have to say is, if it comes back, you got a lot of thin places. So 46 back down here is really kind of the place, and then 35 is where you have most of the trading action. So I mean, this moved really fast, and look at how wide the bars are. It can come back just as fast, right? So keep that. We're always neutral in the market. We're always neutral in the market. We have bias, upside, downside, but you have to realize you don't know who's going to show up and decide to do the sell. And the move was fast, right? 2 hours all the way up. So I told you that you could have a fast move through here because it was thin, and you pretty much got it super fast. Intraday, we already covered these intraday levels, the moves. Not sure what else to kind of give you at this point. This was the P distribution. It stays up here at the top, but they take the inventory off, and so they're in a good place for a run come Monday. It finally found support across this little volume node here. This one was stacked on top of this one pretty much, right? It traded right down. If you look at these two pivots, traded right against the opposing pivot. I've talked about that in plenty of videos. Here's the opposing pivot right here. Here's the bounce. Trying to look for anything else that kind of stands out. To me, nothing here. Again, more of the same. Nothing to really share with you on these charts. Just an incredible run this week. And then the symmetry. So we had drawn the symmetry in this morning. Look at these runs. 100% range extension. This one, got a little traction right there at the 100% range extension. Again, right before the 100% range extension pullback, goes through it. 100% range extension, 50% on this one. Doesn't quite make it all the way across. Kind of a signal that maybe it's going to turn right there, and it does. Gets the bounce off the extension, comes back, hits it. You get a nice, beautiful bounce off the first touch here. Comes back to the other side level, breaks through, trades under. Over and under, we've talked about that in several videos, that's how you get your support and resistance line. Trading above and below. Comes back, hits it, gets the sell, comes back, hits it, gets the sell, finds the support on it, trades under, chopping around in it, comes back, gets a touch, beautiful bounce, comes back, hits it, sells off, sells through, comes back, hits it, beautiful symmetry in the market. And all these lines were created from way back here in the morning when we drew this first little level right here, and it was just 100% range extensions all the way up, and every time it hit there was a pullback. Doesn't mean it's not going to trade through it. It's going to trade on both sides of the line, but great extensions, and that's how that works. So it's Friday. I hope you guys had a good trading week, And I will see you guys on Monday. Take care.